This video part 4 on sample problem number 2 goes over the child tax credit. We have established in a prior video that the taxpayer has filing status head of household and has a dependent child, Tabitha Stevens. So the taxpayer may qualify for child tax credit, which is not a reduction of the taxable income. Rather, it's better than that. It's a direct reduction of the amount of tax owed, reduction of the tax liability, dollar for dollar. What is this credit and what are the qualifications? In Chapter 7, 7-1, this credit gives as much as $2,000 per qualifying child. Remember, to be a qualifying child must meet the 6 tests of a qualifying child from Chapter 1. The qualifying child must pass the relationship test, domicile test, age test, and note this, except in the case of the child tax credit, the child must be under age 17. Also, the child must pass the joint return test, citizenship test, and last, the self-support test. What is the age test again to be a qualifying child listed as a dependent of the taxpayer? Must be under 19 years old, right? However, to get this child tax credit of up to $2,000, the child must be under 17 years old. So if the child is 18, then the child will not qualify for the child tax credit. This is a very confusing point, so be clear with that. If the qualifying child does not get the child tax credit, it could get a different credit called the other dependent credit, which is $500 instead of the max of $2,000 for the child tax credit. Another important point with the child tax credit is that it is subject to a phase out, meaning a reduction of $50, reducing the credit by $50 for each $1,000 of AGI, adjusted gross income, above the threshold of $200,000. If married filing jointly, then the threshold is doubled. It's $400,000. Example, the taxpayer, who is head of the household, qualifies for this credit, this child tax credit, and makes $201,000, which is $1,000 above the threshold. So, what would be the child tax credit? It's not $2,000, right? The max is $2,000. And actually, this individual gets the max of $2,000, but because income is very high, it's above the threshold of $200,000, and it's above by $1,000. For each $1,000, it's reduced by $50. So take $2,000 minus the $50 reduction, then that comes out to $1,950. Take a look at this example in the book to understand the calculation of the phase out, and don't forget to round the number. So in this case, when the division is made and it comes out to 9.1, 9.1 is rounded up all the way to 10, okay? You must understand that the child tax credit has 2 parts, the regular child tax credit and the additional child tax credit. Regular child tax credit is non-refundable, and the additional child tax credit is refundable. Let me explain through an example. Your tax liability, for example, is $1,500 and the child tax credit, let's say, is $2,000. How much do you owe in tax? Then apply the credit to the tax liability. You could only apply, in this case, $1,500 because you only owe $1,500. So you can't apply more credit than what you owe. That's because the credit is non-refundable credit. You won't get any money back refunded to you because you only apply the part that you owe. Even if you apply more, it doesn't matter. You won't get any refunded to you. In this case, you still have $500 of unused credit. This unused credit then could be applied to your tax liability, and you will then be refunded $500 if that portion, that $500, is a refundable credit, is a refundable type of credit. This portion of the credit is called the additional child tax credit. And this additional child tax credit is a type of credit that's refundable, and it has a max of $1,400 that can be refunded. In this case, the $2,000 of child tax credit, $1,500 is applied to the tax liability, and then $500 of remaining unused could be considered an additional child tax credit, and the additional child tax credit is a type of refundable credit. Therefore, you can apply the credit and get the credit refunded to you, meaning money paid from the government.